Hi everyone, Mark Myman here, coming to you with a January 2023 monthly update. We are going to be bringing this to you once a month, so please keep an eye out. And for those of you sales managers or team leads, please share this with your agents so they can get the information and learn from it as well. So, quick prediction for 2023. Sometimes when the market shows some level of uncertainty, banks get a little bit nervous and start cutting back guidelines. We saw this most recently during the pandemic. At the very beginning of the pandemic, a lot of banks stopped offering 80% financing or higher on jumbo loans. We have not seen that materialize yet, but usually the first place we start to see those cracks is in the more risky non-QM sector, and we have started to see a little bit of that. So let's hope it doesn't spill over into the conventional market, but it might. So just keep an eye out. That's one of the reasons why having a lender that has a lot of different options and not just one is a really, really important thing in a transitional market like we're in. Next, I want to talk about interest rates. So as you know, last year was a really rough year for interest rates. We are fully expecting that things are going to normalize this year. We've already started to see them come down a little bit. Fannie Mae came out with the prediction that they will be in the mid-4s by the end of the year. I think we're going to see a little bit of a slow decline over the first 3 to 6 months of the year, and then probably a more rapid one in the second half of next year, and then they should level off now that inflation is finally getting under control. So keep an eye on rates. That's going to be an important factor. I know a lot of buyers are sitting on the fence waiting for the right opportunity, but the right opportunity is now. So take advantage of that. We also want to talk about investors, which in my opinion are probably the best market segment to be going after right now. That's where the opportunity is because they're not emotional about real estate. If the numbers make sense, they will act. So we have added a lot more products for investors. We're really doubling down in this space because investors are usually the ones that bring us out of a bit of a down market. So don't lose contact with those people. They could be gold for you. Another update is that Fannie Mae recently increased their loan limits for 2023. For a single family house, you can now get a standard conforming loan of $726,000 and change. For a high balance loan, which applies in higher cost areas like New York, California, and others, we can now do a loan of $1,089,000 on a single family. Those loan limits do go up for multi-unit properties. So check with us if you have any questions, but this is another great way that we're going to be able to accommodate more people in 2023. So how can we work together to add value? Number one, invite us to your team meetings or your sales meetings. We would love to get this type of information out to your community and make sure that we're all working together to be able to enhance the experience of our clients and make sure that they make the right financial decisions. Speaking of which, let's get on a Zoom together, pick a topic that is of relevance to your community in particular, whether it be co-ops, condos, whether it be the trajectory of interest rates, what the Fed's doing, anything you think would catch the eye of your market. And let's get on Zoom together and talk through it, record it, and post it on social. It's a great way to create content together and bring in experts of people that are familiar with things that your clientele want to know about. Next is that we can do a social media audit. So if you're wondering, hey, are we doing the right things? Are we not? Our marketing department is really strong in this space and will help you determine if you're on the right track or if there might be some things that you want to change. So if you have any interest, it's all complimentary for people that we work closely with. We can offer you a social media audit free of charge to be able to do that analysis for you. And next, we're also doing our Financial Wellness Forum, which is a platform of web-based sessions where we'll interview different people from different aspects of personal finance and trying to help our clients create a little bit more awareness about financial topics that are relevant to them, especially as they're trying to buy real estate. A lot of these things like estate planning and other aspects, insurance, all become more and more important. So we want to make sure we're getting that information out there just for the benefit of the community around us. We don't charge for this. It's all free of charge and complimentary, and we want to just get word out there about how to make people more well-rounded financially. Our next session of that is actually on January 18th, Financial Wellness Forum. The topic is capitalizing in a down market. That will be real estate related and also other investments as well. So another couple important dates coming up this month. January 13th is the all-important inflation report. As inflation goes, mortgage rates go. We're starting to see inflation dip, and that's why you're seeing mortgage rates dip. So that's an important one. That may be a day that you want to wait for your clients to lock in their rates until after that date, because we might see some relief. And then January 31st into February 1st is the next Fed meeting. We're fully expecting that they are going to raise rates again, but that really isn't having much of an impact on consumer mortgage rates other than lines of credit and others that are based on prime. But we are starting to see interest rates in general cooling, and that's obviously a very welcome trend for all of us. So for updates like this, please stay tuned. You can follow us on Instagram at The Bridge Loan Guy. And we hope to be in touch with you again real soon. Take care.